You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music can mean but one thing. It is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's going on across the broad spectrum of futures options markets? Well, let's find out together, shall we? It is time for TWIFO. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-scintillating, ever-compelling, ever-informative network upon which all of you are mainlining these days. Pleased to see so many people diving into the network and indeed to TWIFO in the latter portion of last year. Welcome to all of you out there looking to learn a little bit more about all things futures options. Remember, at the end of the day, we do this show for you. So if you have a question or a comment or a product you'd like us to talk about, dive a little bit deeper into on the show, you know where to find us at Options on most of the major social media platforms. Questions at theoptionsinsider.com. Also works if you want to get your questions always bumped to the top of the list. You want to listen live, ask questions there, all sorts of other fun stuff that we have there. Pro Q&A sessions for even more great question asking. And of course, options oddities, everything else, theoptionsinsider.com/pro is the place to go to learn more about all that fun stuff. Get yourself elevated into all the cool things we have going on over there on the Pro, not the least of which being, of course, some great giveaways. Closing in on the January Pro Trading Crate any day now. Going to sign, seal, and deliver that one to one of you lucky folks out there. So make sure you're active for the month of January. Get your name tossed into the hat to win fabulous prizes. And let's see who's joining me today. Holding down the old CME hot seat, our old friend, Mr. Uncle Mike Tosaw from St. Charles Wealth Management. Uncle Mike, welcome back to TWIFO, sir. It has been too long.
Always a pleasure to be here on This Week in Futures Options.
Look at you auditioning for that announcer role. You know, we have an opening, so if you want to reach out to our producers after the show, we'll see. No promises, but we'll see if we can get something going for you. What do you think?
Would love that. And you know what else I have to say about that? How about that?
There you go. As we keep on rolling, listeners, it is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, let's do it. Let's commence operations here, see what's lighting things up over there in the land of CME to the light side, aka the upside, and to the dark side. Uncle Mike, you know this dance by now. Where should we begin our journey, sir? To the light side or to the dark side?
Let's do the light side today.
I'm stunned. I'm floored. I'm surprised that you, the ever optimist, ever permabull, would go for the green. All right, to the green we go, Mr. Uncle Mike. You picked the right direction this week because we are pretty much roughly 2/3, maybe more like 70% in the green this week. A lot of green on the screen here this week. You folks, as always, can see this report for yourselves in all of its glory if you want to go down and see what all the top movers and shakers were and all the dark side. What was number 16 to the upside? If you want to find all that fun stuff and a whole bunch more, follow CME on Twitter. They always tweet it out. We always tweet it out as well at options. So if you want to check those out before showtime, that'll give you access to this report, which otherwise is a premium report. The only way you can get access to it is over there at bandtix.com. And hey, if you like all the stuff we're doing over here, you want to dive deeper into the world of futures options, you could do worse than heading on over to bandtix.com, BANTIX.com, and clicking on, I should say, the free trial button to check it out for yourselves, because we really just scratch the surface of what these reports have to offer here on this show. It is only an hour-long show at the end of the day. Only so much data we can convey to you in that time. All right, to the light side we go. We're going out to the land of Japan, the land of the rising sun, making some headlines of late. The rest of the world grappling with inflation, talking about raising rates. And Japan's like, nah, we're good. We want to stimulate our economy. So Japan being a bit of an outlier, but popping up here. The Nikkei popping up here at number 5 here. The yen-denominated Nikkei, of course, up 4.14%. Don't see that too often, so it's intriguing times out there. Number 4, KC wheat. So forget about that cool Chicago wheat. We're going out to KC wheat, up 4.34% for number 4. Number 3, we've got the NASDAQ, the E-mini NASDAQ. So going out to equity land, up 5.58%. Number 2, Uncle Mike, cover your ears, sir, because it is your beloved Bitcoin, up 9.72%, almost 9.75%. It was number 1 in the same direction last week, up 9.5%. So a rocking couple of weeks here for all things Bitcoin. So that's one of our frequent offenders right there. And then number 1 in the light side, one of our other frequent offenders, it is lumber, up 13.19%. Man, this thing cannot stop moving. I wish there was more options paper to discuss here, listeners. Alas, that is not the case, but it was number 3 to the light side last week, up 2.31% this week, taking the number 1 spot, knocking its compatriot Bitcoin to the curb there, up 13.19% for lumber. Now, to the dark side we go. Let's see if we can find our other frequent offender, which is nat gas. Then we would have a trifecta here on the show today. Number 5, going out to the metals, it's platinum, off 1.54%. It was number 2 in the same direction last week, off a little over 5%. So rough couple of weeks for platinum. Number 4, now we are going out to the FX landscape. We've got the yen USD off 1.58%. Again, when FX pops up on the movers and shakers, outside of some aberrant scenarios, maybe it's a quiet week in that particular direction. Number 3, now we're jumping up a little bit. Number 3, we're going out to the ags, to soybean oil. This one's been on our radar for a while, off 3.83%. So that's a little bit more respectable. Number 2, back to the metals. It's palladium, off 5.25%. It was number 3 in the same direction last week, off a little over 5%. And our number 1 dark side mover this week, listeners, we do have a trifecta. It is nat gas, off 13.41%. It was in the same spot last week as well. It was number 1 to the dark side, off 7.45%. So Bitcoin was number 1 last week, up 9.5%. This week it is number 2, up 9.75%. Lumber at number 1, up 13.2%. And nat gas to the dark side, number 1, off 13.4% after a week when it was still number 1, but it moved roughly half, about 7.5% out there. So intriguing couple of weeks here for our movers and shakers report listeners. All right, Mr. Uncle Mike, where should we begin our journey this week? Any of those movers and shakers catch your eye, or is there something else on your tape you want to discuss first, sir?
Well, why don't we go with Bitcoin?
Oh, wow. I did not expect you to go there. All right. Let me dust off the old crypto drop for you, because here we go. Listen.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
Okay, so I know you're only half joking here, Uncle Mike, but why would you choose this product category, this asset class that I know you appreciate and it holds so dearly and closely to your heart, sir?
I figure that this is more of a trading show, and it's definitely a great tradable product, no doubt about that. I've never denied that. My disagreement with the product is that it's it being a legitimate long-term asset class. So I'm interested to hear and talk about Bitcoin.
Who are you, and what have you done with the uncleist of Mike's, sir? I don't know what to say. I don't know what to do with myself here, talking about Bitcoin with you. It feels wrong.
I mean, don't get me wrong. There's no way you'll ever hear a bullish bone in my body. But I mean, I think what you need to do, Mark, is expand yourself and understand that money can be made on both sides of the market. Have you ever thought about that?
This is all news to me, sir. I need to go back and change my entire philosophy here on all 16 years of the network, and I learned something new today out here. Good stuff.
That's right. It. As I insult the host.
Let's go out to the land of Bitcoin listeners. You know where to go to find all this fun and more. CMEgroup.com/TWIFO, TWIFO. That's the place to go. And then we're going to go into that drop down. And surprisingly, Uncle Mike chose crypto, so it's just one from the top there. We're going to hang out in the big Bitcoin products first. These are the 5X multipliers, listeners. And you know, if you've been listening to this show, the Crypto Rundown, for a while, these products very much struggled out of the gate. And until not that long ago, they were still struggling to do a couple of hundred contracts a week. This last couple of weeks, that is not the case. They're putting up some numbers this week, closing in on 2,500 contracts. Again, it's no old school Eurodollars or E-mini, but for this product, this is watershed moment of volume here. So 2,500 contracts already on the tape this week. By the way, Bitcoin coming into the start of this segment, 23,025, up 635 handles, or about 2.85% just since Monday here, just since the start of the week. So yeah, things are booming out here in all things crypto, listeners. And what are they trading out here, listeners? Well, it looks like they're getting a little bit optimistic. They're going out to the June 35,000 calls, listeners. That was the big dog this week. 436 traded this week. Hard to tell. A lot going up on Monday. It could have been a 1x2. 25,000's also traded 40 times. But we also saw 175 of the 35,000s trading straight up on Wednesday and 180 today. So there's no other verticals going up with that. That's just straight up interesting. In fact, looks like it could be a bit of a collar with a kicker, perhaps, because we also saw that same day, Wednesday, when 175 of the 35,000 calls went up. We also saw the 21,000, 16,000 put spread go up 175 times. All this is opening, by the way, listeners. So they could have bought that put spread, again, to lock in some protection through the June expiration, then maybe turn around and sell the 35,000 call against it to finance all of this. I've seen crazier things. Now you're buying that 21,000 put, you're selling the 16,000 put and the 35,000 call against it. So you're getting fairly decent amount of juice back for your outlay. And you get some protection of the 21,000 strike to boot, as the Canadians say. Not a bad do. Intriguing. You like that, listeners? Maybe you like it the other way. I'm curious. Hit us up. Let us know. You want to let your Bitcoin go at 35,000? You feeling bullish and hodlery again? You not want to trade that one? I'm curious. But that's interesting stuff. We haven't seen that kind of paper going up out here for a while, but interesting stuff. Also saw the 23,000 puts. These are in February, so a little bit closer to home. Pretty active this week. Again, that's our at-the-money strikes. That makes some sense. Doing about 200 contracts. The big day for those was Tuesday, about 120. So intriguing stuff out here in all things Bitcoin. I'd be remiss if I didn't also pull up the micro Bitcoin to see if those products are resonating at all with you folks out there. And you know what? They are again. You know, these things were doing 20 contracts again just a week or two ago. And then all of a sudden this week, listeners, they are back with a vengeance. Wow, 20,076 have already traded this week. So, again, these are the kind of numbers we were looking forward to and expecting when they launched, and they kind of came out with a whimper. And for a while there, we were seeing the big 5X contract doing a couple of thousand contracts a week and 20 of the micros. It made no sense. So now we're starting to see the micros catch up. And it looks like the big dog, well, that's a pretty sizable print. The 23,000 puts, again, that's the at-the-money strike. That's kind of the level we're looking at here. Doing 10,000 contracts this week. 10,001 to be precise. 5,000 Wednesday, 5,000 today. Also looks like we got the 23,000 calls going up 5,000 times. These are February again. So, yeah, these have about 8 days to go. Going up on Wednesday and again today. So they could have put them on Wednesday and taken them off today. Maybe a bit of a straddle out here. Dare I say it? 23,000 straddle. That'd be interesting. Going up 10,000 times each. 23,000 calls and the 23,000 puts. Opening on both. Wow. Interesting. Uncle Mike, you like that? You like that 23,000 straddle level going up in the micros, potentially 10,000 times, sir? Does that float your boat?
Hey, it's interesting. And so Bitcoin's at a stage right now where, is it a garbage asset for the long term? Yes, I've not changed my stance on that. No question about that. But what's interesting about it is that you're getting these prints that are very optimistic. I remember on the option block many years ago, we'd often see a lot of out-of-the-money gold calls. And I'm sure that still exists quite a bit. But that was something we talked about pretty frequently because there was a lot of people that were interested in the end coming and then gold going up through the roof. And of course, gold's you can argue how good it's been through the years and depending on what you're trying to do. But what I'm interested in right now, I'm not going to do any tradable actions on it, but I think it's just interesting to watch are not only the straddles, but like the out of the money calls. Like I think you had mentioned a 35,000 call or something along those lines that someone's actually expecting Bitcoin to almost double and they're willing to pay premium out of the money for it. Is that possible? Yeah. I mean, Bitcoin could easily be at 100,000 tomorrow, just how volatile it is. I mean, once again, the end point of it is zero because that's what the intrinsic value of Bitcoin is. But in the near term, the movement of it is fascinating to watch. The straddle that you have right there, I think that based upon where the move is and where someone's looking to go with it, and if they adjust it properly, that's something that there could be a lot of benefit in a straddle. Because Bitcoin can definitely move a lot. Now, once again, premium's not going to be cheap in something like Bitcoin, so you need to make sure that you're adjusting it well. But it's definitely something to think about if you're looking to trade something that traditionally has had a lot of movement. Now, Bitcoin has not had a lot of movement since summer. We're at levels with which we were in mid-June still, we're up 10% approximately, but that's nothing for Bitcoin. Bitcoin peaked out just under 70,000 in November of 2021, and then it proceeded to go down to 20,000 by June of 2022. And we've kind of just channeled there around the 20,000 level. Now, if you're expecting a big move, which apparently if you're in a straddle, if you're buying a straddle, you could get this in something like Bitcoin. And I think it's going to be some very volatile and large movements. But once again, in the end, the big movement is going to be to zero.
That's why I was kind of surprised when we did our annual sentiment poll just a couple of weeks ago. We asked, 4 different asset classes, and one of them is Bitcoin or crypto, and which one has the potential to rally 10%, take a free 10% flyer on the year. I was surprised Bitcoin didn't get more votes just for the statistical purposes. It can do 10% in a day or two easy. We've seen it done many times. So you have a good chance with Bitcoin, and it has been beaten up, but Bitcoin got about half the votes it did percentage-wise that it did this time last year. So intriguing stuff out here. Before we roll out a crypto really quickly, since we're in it, listeners, let's go check out on our buddy ETH really quickly. ETH actually down a little bit on the week, down about 2.5% since the start of the week. So ETH hanging out at the 1,600 level. And looks like the big ETH, not doing a ton of paper, but the micro ETH starting to percolate again a little bit as well, which is interesting. We're doing some paper for a while, and they kind of just dried up. Now starting to come back. Looks like we got about a little over 1,000 going up so far this week. And looks like most of that, almost 1,000, are these 17.5 puts. So these are in the money puts. Let's see, how far out are these? These are March. They have about 35 days to go, listeners. 17.5 puts going up nearly 1,000 times, almost all of that on Tuesday, all opening. So somebody opened nearly 1,000 of the micro 17.5 puts. Again, these are in the money. So are they selling in the money puts? And then if they are, hopefully they like Ether at these levels because they'll be picking some up. Or will they be perhaps buying those puts because they think perhaps we are returning to the depths out here? Intriguing. You like those, listeners? ETH 17 half puts in March. Hit us up. Let us know. Uncle Mike, you already threw us a curveball. You already started us here in crypto. So I'm already all a Twitter here. I don't know where we're going next. What's next on your radar, sir?
Why don't we go to... this is a tough one now, because, I mean, what's more interesting than crypto? Let's try lumber.
Lumber. Throw me all kinds of curveballs today. All right, to the ags we go, listeners.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, welcome to the wonderful world of ags. And lumber is hanging out in there, listeners. It is technically a soft, but it can be found way there at the bottom of our list of ags. And as you know, I was pulling up again as he said it just to make sure. But alas, we are not really seeing any options paper of any note here in lumber, which again, I know they've added the mini products. They're trying to make it more palatable out there to all of our friends in the retail world. Yet for whatever reason, they can't get it done out here, listeners. So no options paper really to parse. I was hoping for maybe even like a one lot or something out. Nope, nothing in lumber out here this week. So Uncle Mike, since we're hanging out in ags anyway, I will give you the choice. Should we dive into wheat or soybean oil next, sir?
Let's do bean oil then.
Bean oil. All right. To the soybean oil we go, listeners. If you've been listening to the show for a little bit, this one has kind of been a bit of a frequent offender. Pretty busy week for soybean oil as well. Nearly 43,000 contracts on the tape this week, listeners. So that's nothing to sneeze at. Certainly way more than what we're just talking about in all things crypto. And by the way, where is soybean oil right now? Trading at 60 3/4 off about 1.2 handles or nearly 2%. Of course, you go back to the end of our show last week off nearly 4%. So giving up some of those gains of late out here, listeners. And of that nearly 43,000 contracts, a little over half, 53% going up in the March contract. So we're going to hang out there. What is vol, you might ask, in soybean oil? And I would respond, it is 26.5 in March. And pretty much unch, so not much change out there in March soybean oil. In terms of the puts and the skew, by the way, we didn't break down skew out there in crypto. Still not a ton of that out there, but if you want more skew breakdowns and analysis of vol and stuff, check out the crypto rundown every Monday. We kind of get into more detail on that there. Whole show just about that. Uncle Mike's favorite show here on the network. But the puts last week, 2.4% in the soybean oil last week. This week, about 1% bid. So a little bit of premium there, nothing to write home about. The calls, about 1% bid last week. This week, about 0.5% cheap. So a little bit of a swing there. Both of them are mostly flat to the at the money. I call less than a point in either direction. Not much to write home about. So mostly flat out here from a skew perspective. We're not seeing the soybean oil skew really pricing in a lot of action in one direction or the other. And in terms of the action that was out here, it was the 60 puts, listeners. So pretty much the at the money put here in March, doing 3,500 contracts this week. Couple of pretty much even days. We had a little over 1,000 on Monday, slightly opening, 1,000 on Tuesday, slightly closing, 1,000 more on Wednesday, also slightly closing, then about 500 today. So pretty active contract, all things considered out here in soybean oil. Right behind it, we have the 61 half calls going up nearly 3,200 times this week. The big day for those was Wednesday, about 1,400 on Wednesday, slightly closing there. 1,200 on Tuesday, opening. Most of that was opening. No paper at all on Monday, which is interesting. And about 500 going up today. So back and forth on those as well. Let's see any other interesting or aberrant paper out here. We've got the 68 calls. So if 60 even puts and 61 half calls, not doing it for you, allow me to present the 68 calls going up 2,000 times this week. Looks like it was a 68.75 call vertical, went up on Wednesday 2,000 times. So obviously that's 4,000 total contracts, listeners. Looks like they were closing it. So it looks like somebody deciding that this March 68.75, either we weren't going to get there in time, so they were taking it off. Maybe it's a little bit of a retreat here, deciding, time to get the heck out of Dodge on this one, save what premium we have left. Or maybe they overwrote this thing and they want to get while the getting is good. Either way, closing out a 68.75 call vertical 2,000 times, helping to add a little bit of paper out here in all things beans. And let's look really quickly because the wheat is lighting it up this week as well. We'll go out to the Chicago wheat, though, SRW wheat. It moves pretty much in lockstep with KC wheat, and it also does a heck of a lot more paper. Nearly 100,000 contracts on the tape right now for Chicago wheat listeners. And let's see, of that, about 40% of the paper going up. In the March contract has about 30 days to go. Where is Chicago wheat right now? 752 and a quarter, up about 10 and 3/4 points over the past week, about 1.5%. If you go obviously farther back to our show last week, it's up more than that. The vol out here looking pretty frothy, 30-10, up nearly 2 points this week. So with VIX threatening to break the 19 handle, that 30 vol in wheat looks pretty good by comparison. Let's see if we got some skew. And you know what? The answer is we do. So the ag's delivering where the other complex is not from a skew perspective. Last week we had the puts 3.1% cheap. This week, nearly 9% cheap. So getting a little bit of some discount to those puts. Nobody wants the puts. The calls last week, 4.1% bid. This week, 10.2% bid. So they are bidding up the calls and hammering the hell out of those puts. Kind of an inverse equity skew here, listeners. Which again, it's an ag, it's a commodity, so we tend to see those kind of things get bid into the upside here. That's kind of what we're seeing right now. So look out above here for wheat in the near future, listeners. In terms of action, what was leading the dance? It was actually the 735 calls going out in a day here in February, pretty much a daily. Everyone's talking about 0 DTE and SPX. Allow me to present 0 DTE in SRW wheat. Well, not all of it. It started trading on Monday, obviously, but weeklies at the very least in SRW wheat. The 735 calls doing nearly 5,000 contracts this week. The big day was Monday, 2,200. Looks like most of that was closing there. Then 1,300 going up on Tuesday, 600 on Wednesday, 500 today, back and forth the rest of the week, opening to closing. But someone was bailing on a ton of those 735s on Monday, which is interesting. Then we go right behind it. We have the 800 calls. So weird strikes abounding here. Almost 50 handle out of the money calls. These are in March, by the way. These are pretty active this week as well. Nearly 5,000 of these as well. Over half going up today, 2,500 today, about 1,000 on Monday. The rest kind of scattered throughout the week. So yeah, 800s and 730. 800s going out in March, 735s going out in a day. Those are the big dogs out here in wheat. But a lot of bid to the calls out here, which is interesting. All right, Uncle Mike, you fought your way through crypto and even a little bit of ags. So what do you say we dive into your beloved equities next? How's that sound, sir?
Well, that would be kind of weird, but sure.
All right, to the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, to the world of equities we go. You guys know where to go in that drop down. Listeners, go to the asset class, pop out of ags. We're at the top of the list. And we're going to go down about 3 more slots to equity indexes. We have NASDAQ on our movers and shakers this week, but Uncle Mike is more of an S&P guy, so maybe we'll start there. Mr. Uncle Mike, sir, obviously everyone's wringing their hands over these markets. We're rallying, we're selling off. Today we're rallying again. What is lighting up your tape in the world of equities this week, sir?
Oh, I mean, of course, the S&P. I mean, is there anything else that even exists?
There's an index out of Japan that's doing well today, the Nikkei. Everyone loves that.
Right. Let's look at the S&P then.
All right, what is lighting up your tape out there, sir?
A few words. How can I put this? Fed, and more Fed. I think that we were talking about this on the option block a little bit ago, and I believe that dovish equals bullish. Doves and bulls are going to be getting along well, as will hawks and bears. So in other words, if the Fed says it has any type of indication of any type of dovishness, meaning they're going to stop raising rates or they're going to continue to raise rates as we expected or do anything at all, I think we're going to have a stock market rally, and I think we're also going to have a bond market rally as well. I think that's the big story right now in the equity market. We do have a lot of earnings that are happening, but in reality, we're waiting on the Fed. There was the big news with Microsoft earlier this week. Microsoft's rallied back to where it was before their bad news earnings call, so to speak. And I think we're just waiting on the Fed right now.
Waiting on the Fed, indeed, as we see what's lighting it up out here in your beloved E-mini, sir. And let's see. Right now, we're hanging out at about a 4,060 listeners. So they are they're catching a nice little bid out here after we were kind of threatening and dipping below 4,000 not too long ago. So intriguing stuff out here. Market liking what it's seeing out here. Up about 1.8% since the start of the week. You go back to our show last week. Looks like we're up about a little around in that 3%. Yeah, a little over 3% range from this time last week. So intriguing stuff out here, listeners. A lot of paper on the tape, as you might imagine. Over 3 million, about 3.1 million contracts going up in the E-mini this week. You know the song and dance, 0 DTE. We have a great question about that. We'll get to that in a little bit later with our question of the week here. But where are folks trading out here in the E-mini? Would you be surprised if I said 17% of the paper is going out in a day, listeners, and 16% is going out in a few minutes? If you were surprised, then you had not been paying attention lately. I saw an interesting chart yesterday at the STA conference with our buddy, the Flow Master, looking at the options volume and how it breaks down now in all classes on the equity side. And this is not futures options, but you can draw the similar conclusions there. And of all products now, roughly 70% of all the flow is 30 days or less. And you start getting into some of the near dated stuff on some of the indexes, it's substantial percentages are going up in just that front week, if not that front day. So yeah, the game is changing in terms of how people use options, and it has been fascinating to watch. In terms of what people are using out here this week, it was the 4,100 calls. Remember I said we're at 4,060, 4,100s. Can we hit that this week, listeners? Well, we have to get there by tomorrow. That's when these contracts go the way of the dodo. They traded 45,000 times this week, listeners. The big day was actually Monday, 13,100, 12,700 on Tuesday, and about a little under 11,000, 10,800 on Wednesday. Looks like opening on Monday, closing Tuesday and Wednesday. Another 8,400 going up today. So this probably reflects some of that 0 DTE phenomenon, that weekly kind of action. Nice to see that we're not just talking about garbage puts. I mean, those are there too. If you want your 3,400 puts, or the 3,490 puts in this case, going away in 4 days, those traded 41,000 times this week. All of that today, by the way. 41,000 went up this morning. So there you go. That nonsense is still there. And the 3,475 puts went up 30,000 times this morning. So if you want to find that stuff, you can. But we're trying to move past that as a society, as a show, get to some more relevant stuff. So it is interesting to see the 4,100's actual upside paper lighting it up. And it's not all in one go like the puts were. It's scattered throughout the week. So actual trading interest day after day in these 4,100s. That's intriguing. Think we can get there by tomorrow, listeners? We're getting a good chunk of the way there already. That would be intriguing. Of course, as Uncle Mike said, it is all fed all the time right now. So probably going to be somewhat muted until we get there. Let's look a little bit beyond just all this crazy. By the way, 3,900 puts also pretty active this week. Those are going out tomorrow as well. They did about 27,000 contracts. Okay, this is weird. The 3,900 puts did 27,119 contracts. The 3,400 puts going out tomorrow, they did 27,000. You might hear that and say, oh, crazy vertical. Nope. The 3,400 puts traded all 27,000 on Tuesday, and then 0, a whopping goose egg for the rest of the week. The 3,900 puts, because they are actually somewhat relevant puts, they traded pretty actively throughout the week. About 10,000 on Monday, it's about 7,000 on Tuesday, 6,000 on Wednesday, and about 3,800 today. So scattered throughout the week versus all in one clump on Tuesday, but they equal pretty much exactly about 119 contract difference between the two of them. That's the kind of fun paper we have going up out here in equity land. Let's just look a little bit farther out to see if we find anything interesting. 3,900 puts, and I say farther out, this is whopping 8 days. Those are trading as well, going up 15,000 times. Oh, what? This is a par calls, listeners. The literal 100 calls in February traded 16,000. Are we getting into this now? Are we starting to get? We talk about nonsense puts. Yeah, it looks like someone doing a funky box or something, because the par calls, 100 calls, and the 100 puts trading. Yeah, it's the 2,100 100 box. They traded 16,157 times. Well, there we go. Congratulations to you. I haven't seen that kind of paper going up out here in a while. But there we go. If you want more esoteric paper, there it is for you. Other big prints, 3,500 puts in March. These are kind of interesting out here. These are going up about 18,000 times. The big day for these was Tuesday, about 6,500. 4,000 on Monday. It looks like they're closing all week long. So maybe someone is just getting the heck out of Dodge on these. They decided 3,500, bit of a bridge too far by March, given all this rally stuff we got going on now. So they were bailing them either way. They were closing pretty much all week long. Still 27,000 open coming into today. So a lot of paper open out there. Let's look really quickly as well, since we haven't talked equities in a while. Let's run on this show at least, let's run the gamut of the vol out here. VIX coming into showtime, a little bit shy of 19, 1897. So it did break the 19 handle since we talked about it on the option block, down about 1.7 points from last week. VVIX, so the vol of vol itself, at about an 81, down about 3 3/4 points. And vol Q, our NASDAQ friends, down to about 2340, down about 0.6 of a point from last week. That puts the VIX to vol Q spread at about 440, and that's about 1 point tighter than it was this time last week. All right, Uncle Mike, that's a lot of living we did in the equities just for you. And since our producers like you, Mr. Uncle Mike, they didn't make the top 10 or top 5, I should say, movers and shakers this week. But we know you like a little bit of the old metals. So I think we'll head out there next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, welcome to the metals, listeners. Get on into that drop down, pop out of equities, and then we're going to go as an alpha list almost to the bottom, one above the bottom, to the metals. You did hear 2 metals were in our movers and shakers this week. We had platinum, I should say, number 5 to the dark side, off 1.5%. Palladium off 5.25%. Of course, neither of those are big options stalwarts. If you want to add in Uncle Mike's 2 favorites, silver and gold, not exactly lighting the world on fire. Gold, or should be silver, number 19 this week to the light side, up plus 5.57%, and gold up 0.26%. So gold, kind of a rounding error this week. But Uncle Mike, anything catching your eye in the world of metals this week?
And nothing's catching my eye, but what is catching my eye in the world of metals from a year ago is that we have Roe has come back and is in my world again in the silver world. And if you'd like, I can expound on that a little bit.
I would like it. Please do so at your earliest convenience.
All right. So I'm going to have to wait another 15 minutes, but no, just kidding. All right. So what I did a year ago for a silver 1-year play was I sold a 20 put and I bought a 15 put. And the rest of the money I kept in cash. So let's just assume everything's exactly $20. I had $5 of risk, and then the other $15 was sitting in cash. With the credit I took in from that put spread, I bought a 26 call for a year. And the concept is like kind of a hedged risk reversal type of thing, in that I knew that we wouldn't make any money between 20 and 26 with silver, which we didn't, because silver didn't do anything different. And we'd have all the upside above 26. And so the idea behind it was that if silver did go below 20, I'd be more than happy to own it. And if it went below 15, I wanted to be protected. So I was very happy with that trade. Now, of course, silver really didn't do much last year. I mean, it moved around, but at the end, it was pretty much right where it started. And so for this year, what I ended up doing is I looked at that trade again, and behold, the numbers didn't match up. So what could I possibly do? Why didn't the numbers match up? Well, the reason they didn't is because now we have something called interest rates again. The Greek rho is what is used for figuring out interest rates in the option world, and it's back. And so what I ended up doing was I had to actually buy silver itself. And I was doing this on SLV, so full disclosure, but the similar concept would hold true with the futures options. So I had to buy SLV and then sell a 20 covered call. And by doing that, I generated enough premium to buy a 15 put and also buy a 26 call the same way with which I had last year. Now, the trade is identical to a year ago. Okay, it did. I think it did cost me like 4 pennies this year, whereas it did not cost me anything a year before. So I didn't quite get a costless trade, but this year I had to pay 4 pennies on it. Not the end of the world. But what I did do was create an identical risk reward. A year ago, there was nothing in money markets. I mean, it was a minimal money market. So you're really not getting much. Whereas this year, you're getting something. So what's happening is that covered calls are becoming more of a thing now instead of short puts in a much bigger way because of the fact that Row actually exists. So on there, I could have probably done the same trade as I did a year ago and put some of that money into a money market and finance the overall trade that way. I understand that. However, what worked out better in this scenario is doing it the way with which I did. So one thing to really have an understanding of in options in general is that Row is a thing again.
I don't know what you're talking about with this Row. I don't think it exists. I think you made it up, sir.
It's all lies. Don't believe it.
The red-headed stepchild of the Greeks, rearing its ugly head again, this time in Row, or in silver, I should say. Who'da thunk it? Silver and Row together again. Strange bedfellows are made in this market, listeners. Since he's talking about silver, we'll head out there really quickly, listeners. Silver right now, $24.05, up about 11 cents on the week. It's not a huge week for silver. Like we said, up about half a percent since it started this week, and making it on our number 19 on our movers and shakers this week. So kind of a quiet week for the actual trading metals, but doing some actual paper, almost 30,000 contracts on the tape this week. Of that, almost exactly half, 48% going up in the March contract. So we'll head out there. What is March vol in silver, you might be wondering? 28 3/4, off about 0.7 points here on the week. Vol, decently frothy, especially when I just said VIX is hanging out in the 18 handle right now, listeners. So silver looking a little bit juicy by comparison. That's not something you always say. The metals are not usually bastions of volatility, but in this case, looking a little bit frothy. In terms of skew, not a heck of a lot going on out there. 1.3% cheaper with the puts last week, 1.1% this week, so pretty much unched there. The calls, 3.2% bid last week, 3.5% this week, so a little bit slight bid to the calls emerging out here in March silver. Again, nothing to write home about, but it is something. So if folks are intrigued and or biased in one direction, you got to say it's to the upside. In terms of the action this week, this nearly 30,000 contracts, it's kind of spread all over the place, but it looks like the 26 calls. So $2 out of the money calls in March. That's interesting. Those were leading the dance this week with nearly 2,000 contracts on the tape. 1,000 of that going up today. So today, a big day for the 26 calls. The rest kind of scattered throughout the week, opening, closing all week long until we get to today when the big paper went up. We also saw about 1,500 of the 25 calls going up this week as well. Those were kind of scattered all week long as well. No big print today like we saw for the 26s. So 25 and 26 calls in March leading the dance. Probably maybe a little bit net bias towards buying because the skew did tick up a little bit here, but not a ton. So we had a little bit of activity on both sides out there. 21 puts also looking a little bit active, going up about 1,500 times this week. But the big day for those was actually Monday, about almost 1,000 on Monday. The other about 500 scattered throughout the week. Opening looks like on most of these sessions. So opening on the 21 puts, intriguing stuff out here as well. Let's look really quickly. Unlike its compatriot gold, we don't see the comparative far out of the money upside stuff in silver like we do with gold. Every week, like clockwork, if you go out to gold and you pull it up and you go out the end of the year, a year or two, you could see, crazy upside flies and ratios and 1x2s. It's just the way gold trades. Silver, not quite the same. I guess with the exception of these, I found looks like the 28 calls in April of actually, these are just April this year. That isn't even that far out. I thought this was April of next year. 28 calls going up nearly 1,000 times this week. About 500 yesterday, a couple of hundred today. That's kind of the two big days. Opening yesterday, so looks like a 26-28 call vertical in April traded 500 times yesterday. It's about 1,000 contracts there. So 26-28 call vertical in April, listeners. You like that? Are you down for that? Would you be buying that? Would you be selling that? I said we're hanging out right now in silver at about a 24, pretty much even. So got a little bit of a ways to go before the 26-28 call vertical starts to become interesting, but someone putting about 1,000 contracts through that this week here, listeners. Let's look. Any other weird paper going up out here? All right, Uncle Mike, we've got time for one more complex, sir. What else is lighting up your tape out here this week?
Well, we got to jump on the boat with the 10-year note. I'd be remiss if we did not do that.
I had a feeling you were going to go there. So let's head out there next.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, listeners, hopping on the boat with Uncle Mike and the 10-year note. Get into that drop down, pop out of metals, go up one slot to interest rates. Then we're going to go over to U.S. rates and all the way down about halfway to get to the 10-year there. Uncle Mike, you got about 12 minutes left in the show. Have at it, sir. The floor is yours.
Well, the notes have rallied. Bonds have rallied since the beginning of the year. And overall, I believe that, do I think that it was an overreaction to what the Fed was doing? Not necessarily. Because the Fed was being very reactive. And when you are being very reactive, people are going to overreact. That's just kind of a fact of life. But what I do believe is that if we do get some type of dovishness from the Fed, I think we are going to continue to actually hold in the bonds as well. Do I see us having a major rally in bonds this year? No, but in reality, we kind of already have in January. We've actually had a really nice move in the 10-year note. And so I think that with where we're going in the bond world, bonds look very attractive to me right now because, number one, you're actually getting some decent yield on the bonds for the first time since couldn't even tell you. And number two, if we actually do lower rates, then we're going to get a rally in them. Now, do I think we're going to be lowering rates right now? No, of course not. I definitely don't think that we are. But what I do think is that if we just go up a little bit in the value of bonds, bondholders are going to be happy, of course. But during that time, they're getting a decent yield. So the trades that I really like right now are selling and this is something I always like, but I really like it right now, is selling premium on the 10-year note. If you own it, whether it's through some type of an ETF or whether it is through just the 10-year note itself, by selling covered calls on it, you can get extra yield. And if it goes up just a little bit, you can usually kind of slip one by the goalie and collect that premium and not have to worry about getting called away. And if you do get called away, of course, you can sell puts to get back in and you can adjust things and things like that. But where I'm going with this is that I think that we're going to have a slight move to the upside or a slight move to the downside. And on there, I think all paths lead to selling premium on the 10-year. And so that's what I'm seeing right now. And it's going to be an exciting year for the old 10-year note boat.
Let's see if it's an exciting week out here in the 10-year. Doing a little over 2 million contracts out there. So nothing to sneeze at out there in 10-year land. Where is the 10-year hanging out right now? 114 and about a quarter. Kind of unched on the week. So from an underlying movement perspective, not a rock'em sock'em week, not compared to what we've seen of late out there. Volume perspective is kind of interesting. And also, weirdly enough, 10-year kind of trading like an equity this week. Almost half, 47% of that 2 million contracts is going away in a day. So this is all very near dated paper we got going up out here, listeners, this week. What is the volume? Might be asking the 10-year right now, 7 1/4, up almost a full point, about 0.8 of a point. So that's a decent vol surge, all things considered, out there in the 10-year. You're starting at a base below 7 and you rally nearly a full point. That's a lot of vol coming in. In terms of skew, not a heck of a lot going on out here. 0.2% cheap last week, so pretty much flat. 0.6% bid, so a little bit of an evolution there, but not a ton. And then the calls last week, 1.8% bid. Actually, they did come in quite a bit because now they're 2.5% cheap. So a lot of swing to the downside here over the course of the week in the calls. And what was the most active contract? It was the 114 puts going out tomorrow, doing 137,000 contracts this week. So again, that shows you how much paper goes up in the 10-year, right? That's more than we just talked about in silver, and you throw in soybeans and a couple other complexes, all that together, and you did more in the 114 puts in the 10-year note than all of that out there. The big day was actually Monday, 53,000 going up on Monday, 41,000 actually on Tuesday. So it was opening to closing Monday to Tuesday, opening again on Wednesday, 26,000, only a mere 17,000 today. And again, so a lot of paper there, followed right on its heels by the 115 and a quarter calls doing 120,000 contracts. The big day for those Monday, 74, almost 75,000 going up on Monday. My goodness. Most of that closing. So somebody was just bailing the hell out of these 115 and a quarters. They were getting that guy to Dodge, listeners. They wanted nothing more to do with these bad boys. I'm looking to see if there's any other paper that was similar, potentially ratios, like 1/3, the 115s and 116s and the quarters. They both did between 22 and 26,000 each that day. But I think it's just the 115 and the quarters just getting hammered on Monday. Today, about 21,000, 15,000 on Wednesday, 8,000 on Tuesday. Outside of the big just abandoning on Monday, it was opening the rest of the week. So maybe some folks piling back in after the fact. I'm just amazed at how much paper is going up here that is going out tomorrow. I mean, this is kind of like we've been talking about zero DTE. It's mostly in the equities. It's mostly in SPX. No one's talking about it in the 10-year. Now, granted, this is not all listed and expiring the same day, but it is very near-dated paper. It all went up this week, and it's going out tomorrow. So not quite zero DTE, but it's on that cusp. It's on that fringe. And again, we're talking about the 10-year note. This is not a thing we traditionally associate with that. So fascinating stuff. Uncle Mike, does that surprise you? I mean, I know you're a 10-year note aficionado. Does it surprise you with 2 million contracts going up this week? Roughly 1 million of that is going out tomorrow, sir?
Not at all. And the reason it doesn't surprise me is that why would you, if you're a premium seller, you're going to look for something that doesn't move a lot. And of course, you want to make sure you can get enough bang for your buck with the premium. But with as levered as the 10-year note can be with option premium, it's one of the most levered products in terms of margin maintenance requirements that there is. I mean, there are some with more leverage availability, but with that, it does not surprise me at all. And the other thing is just, I know with myself, I'm short a covered call right now in a fund that tracks the 10-year note, or primarily the 10-year note. And I expire tomorrow with that. And I don't want to sell anything above it going into the Fed meeting. So after that, I want to start selling some juice, but I want to stay juice free going into next week. So it does not surprise me at all.
Yeah, the stuff going out next week kind of liked. So maybe other folks are in that same boat there, Uncle Mike. But intriguing stuff here. Let's see what you folks have in store for us. A little bit of the old futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, welcome to the Futures Options Feedback. No shortage of ways for you guys to get access to us at Options, most of the major social media platforms. Questions at theoptionsinsider.com also works. If you're in the live, you can ask those there on the pro side, or just carrier pigeon smoke signals. It all gets to us here at the end of the day, just like Alexis did. Alexis sent this in. Looks like they're an FX trader. They wanted to know if we provide training on how to use Quick Strike with regard to the FX market. Well, I'm glad you're enjoying the show, Alexis. No, we don't train on Quick Strike. We didn't develop. It's not our platform. That would be Nick and his team over there at Bantix. I'll be I'll put you in touch with Nick and his crew over there. I'm sure they have people over there who will be happy to walk you through how to use the platform to great effect in the FX space. Unfortunately, we don't talk FX a ton here on the show. I mean, it just doesn't really light the world on fire most weeks, so it doesn't really make it in here. We could try to squeeze it into the show more for you. We've had more requests for that. So, and again, given what we saw with the dollar over the past year, there was a little bit more action, a little bit more interest out there in all things FX. So we did see it pop on our radar more than we have in the past. But I'll make sure to forward you over to the folks over there at Quick Strike. I'm sure they will have some great ideas for you on how to utilize it more actively in the FX space. Let's go out to this one. Uncle Mike, this is an interesting. I always like this handle, Mucha Mojo. I like Mucha Mojo. Mucha Mojo, you get Handle of the Week award from me. And Mucha Mojo wants to know. I can't say that without laughing now. Mucha Mojo. He says, it seems like equities are not going to blow the doors off this year. So what other assets are you guys looking at with some reasonable upside potential? Oh, well, Uncle Mike, you might take issue even with his first assumption. So maybe let's start there. Are you down with what Mucha Mojo is putting up? First off, how much do you love that handle? It's awesome. B, are you down with what he's putting down in terms of equities are not going to blow the doors off? And then if you are, where else are you looking, sir?
Well, I mean, in terms of equities blowing the doors off of things, there's I've said on the option block how bullish I am this year. So I'm definitely a bull this year. But in terms of other places to look, I mean, I think there's a few of them. If you're fine with handling another sideways year, silver, at some point, I kind of view silver as like it's a thief in the night that's eventually going to come out. And it just hasn't come in recent years. But at some stage, silver is going to unexpectedly go a lot higher. I just don't know when. Another place with which I'm looking, I am bullish on bonds. However, not super bullish, but I think that selling premium in bonds could be very lucrative this year.
All right, Mucha Mojo and everybody else. Thanks for your questions here. That's going to do it for us on the network today. Back again tomorrow, listeners, noon Central, 1 p.m. Eastern, to talk all things vol. Should be an interesting one. Back again after that for all you folks on the pro side. The Rock Lobster is back. He will be joining me on Options Oddities tomorrow to break down the mad week that was. He's obviously back in fighting form. He's been sending me all sorts of trades he's noticed all throughout the week. And all this morning he's been blowing me up. So clearly he's excited to be back talking some oddities tomorrow. So if you're on the pro side, you'll be joining us for that tomorrow. If you're not, what are you waiting for? You're missing a fun party. TheOptionsInsider.com/pro is the place to go to get in on the festivities. And Uncle Mike, if the folks want to get in on all these St. Charles Wealth festivities, where should they go? What should they do?
By all means, check out my website, stcharleswealth.com. You can also follow me on Twitter at Mike Tosaw, Tosaw.
Give the man a follow on Twitter so he can talk about his silver to you and all the other fun stuff that he does at Mike Tosaw, Tosaw, or just go to the mothership, stcharleswealth.com. That's the place to go. You know where to go to get all these reports and a whole bunch more. And with the exception of FX training, that's somewhere else. But if you want to go to see the reports in all their glory, then you go to cmegroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires. Again, that's going to do it for us today. Thanks to all of you who joined us here for the program live or, of course, on demand. We love you all. See you back here tomorrow, Vol Views, and then after that for Options Oddities. Then back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.